Okay, good afternoon to everyone in the audience. I am Michail. I'm very thankful that you guys have not run out, like some of the others seeking either the cooling system outside or break to use the bathroom. But yeah, we're here to speak on this panel on digital assets and of course navigating the regulatory landscape in South Africa. The experts will introduce themselves respectively, but myself, I'm an attorney. I've been practicing for the last 8 years, 9 years this year, dealing with financial services, all the ODPs, asset managers, advising them from a regulatory perspective, exchange control with a lot of the cross-border M&A work that I do. And fintech goods, the tech goods, the blockchain goods, that's all within my wheelhouse as an attorney. That's just a simple breakdown of my experience. I'm from a firm called Hanekom Attorneys. We do commercial litigation and we also do the commercial work in the shadows. And on that note, Anne, please.
As was mentioned, I am at BankservAfrica. I'm the Chief Legal Officer, and in BankservAfrica operates in the payment space. And prior to that, I did work at the Central Securities Depository, and during that period, I was fortunate enough to have been involved in the blockchain environment. So, and I was there before the ups and before the downs. So I do have a very conservative view of blockchain, given my experience there.
It's a regulatory working group under the auspices of the Intergovernmental Fintech Working Group. We really are, we lose sleep over figuring out how to regulate the sector and reap the benefits while mitigating the risks that are involved in the use cases that presents itself in this very dynamic and quickly evolving landscape. And in simultaneously being aware of some of the innovations that continue to happen in the more traditional sector and with a view to the future of how you marry those two and create utility for consumers and also preserve financial stability and drive the country, South Africa Inc., forward.
Wonderful. Thank you so much for your introductions. We're going to get straight into the questions. We have a very short time frame, and if we can, we'll answer some questions from the audience. But to kick us off, I think that most of the people in this room and most of the attendees today understand that the regulatory landscape in South Africa has been largely simplified. We've got the FSCA, which has been regulating financial services by virtue of the new CASP licensing regime. We've got the FIC, which regulates accountable institutions. And if you believe in a crypto asset, to speak on crypto assets, you're basically held by the FIC. And of course, it seems that SARS has their hand on the taxation of crypto assets. The conversation then turns to the other big regulator, and I think Devin spoke about this in the earlier panel, the SARB. So the Reserve Bank, this has been on the tip of everybody's tongue. What is the exchange control context in which we operate? And we'll get to some of those questions later on. However, right now, what we have from the SARB is their Project Coca 2 summary report. And they spoke about the merits attributable to CBDCs, and they've also spoke about ELT settlement systems. What do we make about CBDCs, and is it for institutions, largely within the remit of the banking system? Yeah, and I think this one's for you.
So I think that's a very big question. So I'll try and take them in chunks. I think when we talk about CBDCs, there's two concepts right now that central banks across the world continue to investigate, and it's largely, some would argue, a consequence of the crypto assets ecosystem, right? Because crypto assets showed up and showed us the vulnerabilities, the weaknesses, and the lack and inadequacies in existing payment systems and financial sectors or monetary systems, really. So two of the constructs that we continue to look at when you talk about a CBDC is a retail CBDC and a wholesale CBDC. You mentioned Project Coca. That was really focused on the wholesale perspective. We learned a lot of lessons there, but I think more importantly than being able to demonstrate the ability of this technology to fulfill particular requirements in our space, we uncovered a lot of questions. And what we are busy with now as the SARB is taking our time to really understand collaboratively with the industry how we can answer those questions in a way that is forward-looking, that is sustainable, and that really results in benefits for the country as a large, right? As a collective. And what I mean by that is, on a wholesale CBDC in Project Hawker 2, there was a lot of questions raised around tokenization. There's questions raised around stable coins. And for these technologies and innovations to bring to fruition what proponents argue they can unlock, you require guardrails and you require a regulatory framework that, and I'm going to use the old maxim, but that balances the risks and the benefits, right? We don't get the chance to too often review our laws, make updates. It's not a very dynamic process. Legislative changes in this country and really globally, it's a very extensive process and it's onerous and it takes time. So what's important from a Reserve Bank perspective is to collaboratively with the industry, traditional finance, those emerging sectors, the ones who want to push the envelope a little bit more and are less conservative, and unpack what that looks like going forward. So we're taking our time. The core working group is working on stable coins at this point. The Reserve Bank is looking at tokenization in more detail. And on a retail CBDC, the Reserve Bank continues its work. We think there's a lot of value potentially to be unlocked there, especially the idea of having a digitally native legal tender equivalent, right? So there's a lot of value to be unlocked there, but we're part of a larger ecosystem. And these kind of jumps or these kind of changes have the ability to have trickle-down effects and affect many other things downstream. So it is about making a very informed, robust, well-researched and analytical decision. And that is being informed by real-life experimentation. So we collaborate with the BIS. We were recently part of Embridge. And Project Hawker as well, and it is now about answering those questions in a way that serves the country.
Perfect. I think then, just launching from that question, and or I suppose we could speak about DLT settlement systems and BankservAfrica's role. What is happening in that fray? Is there any comments that you make from that perspective? And
Just
then
a very
obviously,
quick
how does
comment
this
on that.
affect the users of digital assets,
From a DLT point of view, we have leveraged the technology, as you'll find quite a number of regulated financial institutions have. We've played around with DLT and have found some benefits in using the system and have used the system. For example, we've used it for our proxy resolution for PayShare product. But beyond that, I can't say that at this point we've really used it. And it really goes back to the key issue that has been discussed quite a bit today, and which is there is need for further clarity for regulated institutions to confidently be able to move forward in that space. And we'll speak to that a bit more as well.
Absolutely. And thankfully, in South Africa, we're a thriving tech environment where we can see a lot more DLT understanding and platforms originating. There's a mobile economy around this work in this country, and regulations seem to be lagging in many respects, but I think that's a condition of what this technology brings to the world. It's a South African problem. So then, following on from the previous question in relation to CBDCs, it seems that's largely held within the remit of the commercial banking environment for institutional use. Will there be any use case for the retail user, of these CBDCs? If you guys do have any references or drawing points that we can rely on, and then surely within South Africa, CBDCs are an instrument for perfect settlement and ultimately will refine the clearing objectives in making payments in this country. Any comments on the retail uses of CBDCs and the perfection of clearing and settlement in this country in relation to CBDCs?
Yes, I do. So I would agree with one of the earlier speakers who did say that his view was blockchain has not delivered today on its initial promise, which was instantaneous, low, cost-effective payments process for the wider economy. I do feel that retail CBDCs will have utility more particularly for on-chain type of transactions, right? But in the real world, for day-to-day transactions, I would posit that the promise that Bitcoin and crypto assets had at the beginning, say, for example, in the last decade, if you look at faster payment systems globally and what they've been able to achieve, they've first surpassed what in my view, I could be biased, of course, but they've far outpaced what crypto assets could achieve. So I'll mention to you one of the products that was launched last year by the industry, BankservAfrica, and the industry worked together to launch a faster payment system, similar to what you have in India, UPI, if you've heard of that, and for Brazil, PIX, where there is a low-cost, immediate payment system that could be available to everybody. We got that last year already in March, and that provides the utility that you would expect a retail CBDC would be providing for day-to-day transactions. And I would say you don't need it, in my view, for that. You would need it for on-chain transactions.
Absolutely. And, there's also discussion around how the current payment system functions efficiently, and settling and clearing is a bit quicker than what you would, what could be achieved in transactions concluded on the blockchain. So there's always that argument to be made. Anything from your side?
No, I think we keep on living in this dichotomy about, traditional and crypto and DLT. And I do think that at some point, these two things need to come together and merge, right? And it's about crafting a way forward for that says we will provide utility for different use cases across the board. And what we ultimately need is for all of these entities to eventually start talking to each other.
And that's key, the interoperability aspects.
Yeah.
And we look forward to be there when that happens.
Absolutely. Then I think there's a conversation about digital assets, and another key point alongside CBDCs is tokenization, real world assets. There's some real world assets available in this country, tokenized opportunities, providers, so to speak, issuers of real world assets, but no real regulation about these assets. As digital assets, we can acquire them, but what is the regulatory remit within which those providers operate? There are comments about them being derivatives. They look similar to derivatives from a legal perspective. It can be argued in or out. And, that means there's a bit of compliance with the FMA. Do you guys have any thoughts about real-world assets, their regulatory status, and whether or not issuers or providers, service providers who maintain service lines in relation to real-world assets, should those providers be regulated under the FMA?
I'll take that one. I believe yes. Looking at the current regulation, it has catered for intermediaries, right? And you can see that to some extent.
This is the CASP regulation.
Yes, under phase. And that's why I'm saying, if I look at the FMA and what it could do in terms of, if you are saying, and if they look like a security, and I like the initial principles that were set out by the SEC way back, and basically, does it meet the requirements or the principles for security, which I will summarize in terms that I've borrowed before. If it looks like a duck, if it walks like a duck, it is a duck. And therefore, if you really think about it, the FMA should apply, right? However, there is no clarity on whether or not it would and how it would apply, and then how would it be enforced. And to me, that could be, even without, you could take the route of direct specific regulation to spell it out, like they've done in phase, or you could just issue a clarifying guidance note, though perhaps you may need to add one or two definitions in section 1 of the FMA. But there is need for clarity. There's really no reason why there should be doubt. I mean, the FIC has provided clarity. Phase has provided clarity. So FMA, there should be some clarity, or at least some statement to guide the industry. And that would really help.
Yeah, given the intersections with those, I would say not only the assets, but the providers as well.
Absolutely.
There's a definition in the FMA for exchanges. We don't see, I mean, depending on where you get your legal opinion, it will be in or out of that definition as well.
Yeah.
But there's a lot to be said about clarity and the FMA and its application to this industry and digital assets.
The reason why I would like to see that type of regulation is where there are issuers, for them to be regulated in the same way that the issuers are regulated for other securities. And
Internationally.
yes, and then for us to make sure that there's proper consumer protection through the issue regulation and through market integrity type of regulation, the type that we have for insider trading in the FMA, and that would really address some potential gaps. I mean,
then I think, not so much the elephant in the room, but the major concern. We did mention it early on, and it was mentioned, probably been mentioned in every session beginning of the conference, the exchange control problem. Whilst there is a set of regulations that apply to cross-border transactions, externalizing crypto assets or exporting capital, so to speak, there's still a lot of, let's say, disconcert and a lack of clarity from the regulator, the SARB in particular, as to how business entities function in this environment. And I say business entities, I'm largely speaking about business entities as would be described in Currency and Exchanges Manual for Authorized Dealers, who support these transactions and the application to the SARB, FinServ that is. How do business entities make these transactions possible on a cross-border basis, where the manual for ADs does not include references to crypto assets for business entities, and there is a regulatory, I would say, stance. The ex-con regulations ultimately need participants in the market to seek approval to export capital. That's the ethos and the letter of the law. So when we speak about business entities, what is the SARB's take on that, if there is a take on that, and where is the SARB in relation to regulating, obtaining approval from the SARB, business entities, exchanges, companies? How do we go about this process in relation to the SARB when we want to make cross-border transactions and payments and transfers, where we have essentially a lack of guidance from the AD and no guidance in the industry?
So there's not going to be like breaking news today, right? I'm going to clarify it for everybody, and like we can all go out and start our new businesses and our new value chains. I don't think that there's a lack of clarity. I think we're clear on what the regulations say. I just think none of us like what they say. None of us are comfortable with what it says. And when I say us, I mean the broader ecosystem. So the crypto asset service providers and the regulators. We're not particularly happy with it because this technology has now come along. It has implications for exchange controls. It can be used to circumvent exchange controls. And if you listen to the rumblings in the sector, it's significant, the amount of evasion that's going on. And there's an acknowledgement of a need to intervene here. And we have been and it's clear to us as well that there is need to intervene, that there's a regulatory change that is required. And the speakers previously have spoken about some of the nuances that sit in that kind of regulation, about where does the externalization of value get defined in the law. And that's one of the very key elements that we continue to consult on, and that the Financial Surveillance Department of the South African Reserve Bank, in collaboration with National Treasury, looks to refine and provide guidance and clarity. The long and short of it is that we are equally frustrated by the amount of time that it's taken. But what I do want to say that it is a top priority. It is one that we want to make sure we get right, and that once we have a shared stance between the two organizations, that we will communicate and seek public consultation on, right? So that you can also make us aware of things that we may not be aware of, or that we may have ignored, missed, etc., or getting completely wrong. It's taken a lot of time. It is the leg that needs to come online, but rest assured that it is a top priority for us as well.
Absolutely. I think, having worked in the environment and having made many of these applications, I've sort of come to a point in my advisory where I go, in relation to clients, when they ask me these questions and they say there's no regulation in dealing with this, I go, well, there is regulation 1, the exchange control regulations. There's just no cleared out. And whenever there is no cleared out, by virtue of working with your AD and trying to establish what the requirements are in order to make this application, there's always the fallback. In complying with regulations is the fallback, and that is a specific request to the FinCEN, so as to comply with the exchange control regulations. So it's not necessarily okay just to sort of go on your way, disregard exchange control regulations. One can make specific approval or seek specific approval, thereby ask for and request permission from SARB. I think that is erring on the side of caution, so to speak. And I think we have one more question. And we'll make this one quick. Last week, I mean, some people have read this, we've been speaking about this, but the SARB indicated by public statement that they are intentional about acquiring 50% stake in BankservAfrica. What does this union mean for market participants? And of course, are we seeing a potential regulated liability network popping up in the near future? Highly technical, but big conversations happening at the interstate level. Directing this one to Ayn, I think you have wonderful views on it as well. And you have wonderful views on this. Yeah.
Very quickly, I'll say yes, there was indeed a very exciting announcement where SARB and BankservAfrica in the industry will be transitioning BankservAfrica. They have intended to do so in the announcement into a national payments utility. And the key thing for that, of course, it's subject to negotiations and regulatory approval. And the key thing for this was to modernize the South African payment system, to make the payment system more secure, more inclusive, and more efficient. We already started with PayShap, and this really just going to drive that further into it. On your question on the regulated liability network, if you look at, I cannot speak for the central bank, luckily Ayn is here, but looking at Project Cockatoo report and the hub there, and the global development, some of the experiments that are going there, I would say it's coming in a decade or so at least. It's coming.
Just on the RLN concept, the Bank for International Settlements has also released a paper, a really interesting paper called the Fintech. It sits very close to the RLN concept. But where it changes the position is this idea that the central bank should lead the charge, right? You provide the economic anchor, the economic monetary anchor, and it's potentially a way to pan forward. And the BIS, through its innovation hub, has demonstrated through experimentation the viability of this. So there's very many projects ongoing, and if you marry those technologies together, it shows you that the Fintech RLN is very possible, and it's very achievable. It's going to require a lot of work. It's going to require a lot of collaboration. But I agree, I share Anne's sentiments that it probably is in the future.
Perfect. And
Thanks.
I think that's the last one from our side. And to close up, I just want to say thank you to the audience for having us. We've taken your time. If you want to have any of your questions answered, we'll probably be outside for another couple of minutes. I will. So I'll be there, and I hope both of you will as well. Thank you so much.
Thanks.
Thank you.